Welcome everybody. I'm Tom Schmidt and excited to be here. We do events like this kind of twice a year, usually in late March, early April, and again in December, talking about last minute strategies to save on your tax bill. Now, a little unusual. We're doing this in 2025, and what we're going to talk about is money you can save on your 2024 tax bills. But obviously, we work with a lot of investors and entrepreneurs, business owners, high income professionals, all of whom are very interested in how can we save on our taxes. And so we spend a lot of time talking about these different strategies and share them with our audience. I'm going to go ahead and shut off my camera so you guys can focus on the slides, and we'll take off to the races because I got a lot to cover and I'd like to keep this relatively short tonight. So let's talk about how we can put some free money in your pocket. First, these are 13 ways that things you can do between now and April 15th or October 15th, if you get an extension in some cases, to literally reduce the amount of money you pay the United States federal government in income taxes for last year, for 2024. And the first thing is, this is something that I overlooked for a few years and years ago. I had a SEP-IRA with one of my former law firms and saved up a bunch of money in it. But then when I left that law firm, I closed the account down and rolled it over and hadn't had one for a while. And then I realized that all of a sudden, this is a great opportunity to have some tax deferred retirement savings that I was not taking advantage of. And unlike 401ks or IRAs or Roth IRAs, you can put away up to $69,000 per year in a tax deferred, what they call SEP-IRA. It's, it's kind of weird to say this. It's separate from your other IRAs. You can still have IRAs on top of this, but this is a great way to shelter up to $69,000 of income. So the way this works is you go set up a new SEP-IRA account before April 15th, put up to $69,000 cash into that account and start investing it, and your taxable income immediately declines by $69,000 for last year. So this is one of the best ways you can save money. Now, in order to have that, you've got to have some sort of business that you're operating and owning for which you have income. Second way to reduce your tax bill for 2024 is to deduct business expenses now, even if you paid them or pay them in 2025. So if you're self-employed or you own a business, you can deduct business expenses that were incurred in 2024, even if they're paid in 2025, as long as they were billed or obligated in 2024. So first of all, this would be something where maybe you engaged in some sort of expense in 24, but didn't have to pay for it in 24. And if you still haven't paid for it, go ahead and do so now. But any expenses that you've paid, since January 1st, that were for things that you incurred in the prior year. For instance, cell phone account, for December of 2024, you probably didn't pay it till 2025. Boom, make sure you deduct that off your 2024 taxes. And then, of course, you'll need to look at how your tax return is prepared on a cash or an accrual basis, because really what we're talking about is accrual. If you paid the money in 25 for something in 24, if you do your tax return on an accrual basis, you can deduct it in the prior year. So make sure you take a look at this. If you don't have the time or attention span to do it, if you're like me, make sure you point out to your CPA that they should be going through and looking at the stuff you've spent in January, February, March of 25 to make sure none of it is deductible back in 24. Now, the other thing is, this is kind of a future tip. Every December, you should create a calendar entry for December 1st to start looking at things you can pay in 24 that you're going to owe in 25, so you get the tax deduction sooner. This would be purchases that you need to make. Think of it like, I know most people nowadays think about their health insurance deductible and like, hey, I know I need an MRI or I need a colonoscopy or something, I better get it in December because I've already met my deductible. I don't want to do it in January. Well, same thing here, right? Think about expenses that you would normally not incur until next year. Go ahead and pay them in December of this year, 25, and you'll get that deduction earlier. Number 3, you can still fund a health savings account. I didn't even know this one until recently. So long as you qualify, and that's not an easy answer, but if you have what they call a high deductible health plan in 2024, you can still contribute to a health savings account for 2024 until April 15th. So it's $3,850 for individuals and $7,750 for families, with an extra $1,000 catch up if you're over 55. So if you haven't done this and you qualify, do it before April 15th. It's literally free money in your pocket. It's money you were already going to pay to either health expenses or the government in taxes that you can now set aside and save on your tax bill. If you don't qualify, consider going and looking at your current health insurance and maybe changing your plan to a higher deductible, and then set up that health savings account and find out if it's cheaper for you. In other words, you got to compare the cost of your premiums versus you paying the higher deductible after or with pre-tax income. And obviously, there are advisors who can help you make that consideration. But again, here you've got a triple tax advantage. You got the contribution is tax deductible, the growth, if you invest the money, the growth in the money is tax free, and withdrawals for medical expenses are also tax free. You guys may have heard me talk about my father wanting to buy a new sports car, and he told me he was going to do it. Then he came back and said he wasn't, because he figured out he would have had to withdraw the money, the cash, from his IRA in order to pay for the car, and then he would incur taxes on it. And because he didn't have enough left in his Roth IRA to do it out of there, he literally chose not to buy the car because he would have to pay taxes to withdraw the money, which I thought was just crazy at the time. But same thing if you want to have surgery, right? You know, if you have a health savings account and all of a sudden you want to have elective surgery, you can withdraw that money tax-free in the future or this year, whenever it comes up. And so it's a great way to manage money and reduce your total tax bills. Number 4, make a prior year contribution to your traditional IRA. If you haven't done this already, please max out your total 401k plus Roth plus traditional IRAs for 2024. You have until April 15th to do it with regard to IRAs. If for whatever reason you're in a 401k plan and you didn't max it out, and so you're able to take advantage of some IRA contributions, do that. Highly recommend it. For a bunch of reasons, not the least of which is reducing your tax bill on April 15th in the case of a traditional IRA, or creating tax deferred growth in the case of a Roth IRA. By the way, remember, you can also, the cap on an IRA is only a cap on the deductibility of that IRA. So you can put in, let's just say $100,000 into a traditional IRA. You won't get the tax deduction, over the cap, but then you can always convert that into a Roth IRA and have the benefit of tax-free growth, and thereby bypass the caps on Roth IRA contributions. So if you have extra cash, give us a shout. We're happy to talk more about the details of that strategy. And again, you can do $7,000 if you're under 50. If you're over 50, it's $8,000 and get a little tax savings. Number 5, maximize last-minute charitable contributions. I also did not know that if you make charitable contributions in 2025 before April 15th, it can reduce your taxable income for 2024. So if you're planning on making contributions this year, it makes sense to do them before April 15th and get that tax benefit next month as opposed to a year from now. Put a little plug in. You probably know that Rita Carpel and I are on the board of a charity called Grateful Americans. Have our big golf tournament in Houston coming up on April 7th. We benefit veterans and other first responders with PTSD. And so if you're looking for a place to donate some money, we've got a great cause we'd be happy to talk to you about. Other kind of higher level strategies, you can do things like assets that you own that have appreciated, whether it's stocks, Bitcoin, anything like that. You can donate those in kind, and not only do you get the tax deduction, but you also avoid the capital gains tax on the upside. You can also, for those that are above 70 and a half years old, take advantage of qualified charitable deductions from your IRA. In other words, you can offset the required minimum distributions from your IRA by donating up to $100,000 directly to a charity, and it offsets your income tax. This is one of my favorite ones. State taxes. I have a close friend of mine who lives used to live in Maryland, now lives in Washington, D.C. And up there, they have, the state income tax problem. Down here in Texas, we have the property tax problem. And so my buddy is a Democrat and was very opposed to the Trump tax cuts back during the first Trump administration because they put a cap on his deduction for state income taxes, which, as I explained to him, it's even worse for us because we've been deducting 100% of our property taxes for years down here, and now we're subject to that same SALT cap. Now, I've heard rumors, and you probably have too, that they're talking about getting rid of that SALT cap. But in the meantime, again, little known piece of knowledge, if you owe state income taxes for 2024, or you haven't paid your property taxes yet for 2024, please, please, please pay them both if you have to before April 15th, at least up to the SALT cap, which is $10,000. So again, let's just say you owed $23,000 of property taxes for 2024. You haven't paid it yet because you're managing cash flow or whatever. Make sure you pay at least $10,000 of it before April 15th, and then you get to write off that $10,000 against your income for 2024. A great way to get a last-minute tax deduction. And again, it works for income taxes and property taxes. So in the case of property taxes, if you paid the property taxes for the year 24 in 24, obviously they're deductible. If the property taxes are assessed for the year 24, but you pay them before April 15th of 2025, they're also deductible on your 2024 tax return, which is a huge win, right? If you haven't done that yet, make sure you do that. Just to be clear, you can't prepay. In other words, if you pay in December your 2025 property taxes, it's not deductible until you file your tax return for 2025. Now, again, that whole cash basis accounting thing comes up. You'll want to, if you do this and take advantage of this, you'll want to make sure you're doing all of your tax accounting on an accrual basis, so that you can take advantage of, hey, the taxes were incurred in 24, therefore they're deductible, even though I paid them in 25. Number 7, this one's relatively new to me. It's called the Augusta Rule. You can rent your home to your business. Now, we're going to talk in a minute about the home office deduction, but this is a little bit different. This is where you rent a room or part of your home, or maybe your entire downstairs or something, to your LLC, to your little business, for a meeting, an event, or a client gathering. You can rent it out for up to 14 days per tax year, and the business, your LLC, will get the tax deduction for the rent it pays to you personally, but you personally do not incur income tax on the rent. The example I've seen pretty commonly out there is, hey, rent your home for $2,000 a day for 14 days to your business per year, and get a $28,000 tax deduction for your business without incurring taxable income for yourself. And I say $2,000. I don't know what kind of home you live in. That's just something I've seen out there on the internet. You can rent it out for $500 a day. If you have a house like the one in the picture, and you have a big pool party for clients or employee event or something, you could obviously charge a lot more than $2,000 a day for something like that. But again, this is something that you can use every year. You can rent your home from your rent your home by your business and pay rent to yourself and take advantage of that tax deduction. Number 8, again, this is one that I was not aware of, and when I saw that it applies to attorneys and doctors and professionals, I got real excited. So it's called the R&D tax credit. I guess I'd heard of it before, thinking about, healthcare companies and such. But this is a credit for businesses who are developing new products, processes, or software, right? So it works for any kind of business doing any kind of R&D. So you're learning about AI tools. You maybe last year you worked on changes to your marketing strategies. Maybe you developed a new way of marketing your services. Maybe you purchased, if you're a dentist, maybe you purchased some sort of, or rented some sort of new equipment to use in your practice, to try it out, etc. Any kind of R&D expenses like those can be a credit of up to 10% of those expenses, including employee wages and contractor fees, right? So for instance, our little business, Utility Rescue, we have a ongoing contract with a company called Longship Systems, which helps us do online marketing. And literally that ongoing project has month after month has been, okay, let's test a few things, find something that works, okay, implement it. Next month, test some new stuff, figure out what works, implement it. And incrementally, we've been making changes to a marketing program. All of that can be considered to be R&D expense, can be taken as a R&D tax credit and reduce not income, but tax bill doing that. Number 9, this is one of my favorite ones. I remember I was dancing on the table when I took advantage of this for the first time. It's called Section 179 depreciation deduction, and you can immediately write off 100% of equipment and vehicles that you purchased in 2024. And what's cool about this is you don't have to have paid for the equipment or vehicle. So the idea here is that any kind of equipment for your business, laptops, phones, office furniture, software, heavy equipment, and even SUVs or trucks that are used for the business can be deducted 100% of their purchase price in 2024. So go back through your books or have your CPA do it, find out what sort of stuff like this qualifies that you can deduct 100% of. The example I was talking about that I did was, I wish I could remember the year, but it was when George W. Bush was president. I bought a Volkswagen Touareg SUV, and I went to the dealership and signed the contract to buy the car on New Year's Eve, on December 31st. At the time I signed the contract, the car was on a boat coming over from Germany. It was not even in the United States yet. And I financed 100% of the purchase price. As I recall, it was about $45,000. And so I got the car around January 31st. I didn't make a single payment on the car until March. However, on April 15th, I deducted $45,000, the entire purchase price, off my prior year income, and the check I wrote to the government on April 15th was about $15,000 less than it would have been. So effectively, I bought a $45,000 awesome SUV for $30,000 net. Amazing, amazing opportunity. If you bought a car and paid cash, or even if you financed it, look into deducting 100% of it in 2024 on your tax bill. There's a list of a couple cars that we already know qualify there. As I recall, the limit, that 6,000 pound number is actually, I think the word is gross vehicle weight or something similar to that. What that means is the total weight of the vehicle if it has its maximum load. So like my SUV, back then it required 7,500 pounds. If I recall correctly, I think my truck weighed about 3,000 pounds, but it could carry 4,000 some odd. So that got me over that limit. But just look up what cars qualify if you bought an SUV, even if you financed it last year. take a look at this, because you may be able to deduct 100% of it. Up to $1.22 million is the cap. Number 10, most people know about this. I know lots of people, though, that don't take advantage of it, and that's the home office deduction. You can deduct a portion of your rent, mortgage, utilities, and insurance if you use part of your home exclusively for business. How it works, you basically take $5 per square foot up to 300 square feet for a maximum deduction of $1,500 is the simplified method, or you can do actual expense method where you deduct the percentage of the home expenses equal to the percentage of the square footage used for the business. So if you have a bedroom that is entirely your home office and you have an actual business that you do the tax return for, you can deduct all of the expenses associated with that portion of your home for last year. So you've already done it, you've already paid the bills, whatever. You can do this as an extra deduction and reduce the amount you pay on April 15th. Number 11, self-directed retirement plans. These are a little trickier, a little more complex, but certainly something you should consider if you have a lot of income that you need to shelter for 2024. My favorite one, and this doesn't really save you any money for your 2024 tax bill, is, like I said, this is that what they call mega backdoor Roth. So a business owner can contribute up to $76,500 per year into a Roth 401k, even if they exceed the normal Roth IRA income limits. So that's, again, not tax deductible, but man, you get a huge tax benefit in terms of the growth of that money once you invest it. And then the other would be a cash balance pension plan, where you can make a six-figure pre-tax contribution for business owners, and this one does drastically reduce your taxable income, and you can do up to $400,000 per year. Huge benefit there. Talk to your CPA, or you can Google those things, or reach out to Rita and she can get you more info about it. Number 12, man, I'm the poster child for this one also, deducting travel expenses. What it is, if you mix business with travel, you can deduct flights, hotels, meals, and even partial family expenses. If more than 50% of a trip is business, the entire flight and hotel stay is deductible. If you're bringing family, you can still deduct the portion of the expenses that are related to the business. So anytime I have a reason to travel for business, I try to bring, create some sort of fun vacation type travel around it. For instance, Rita and I have to go to Scottsdale in mid-April for a conference. And so we added, for a second business, an investor event onto that trip. We frequently travel to New York for fun, and then we have business meetings around it in order to take advantage of deducting our travel expenses. The other thing that's interesting is that there are differences in deductions for travel meals versus entertainment meals. And so, like when you entertain clients, you can only deduct a portion of that expense. If it's a travel meal, in certain circumstances, you can deduct more. So make sure you look at that, because I got to tell you guys, go look at your credit card statements and find all the restaurant money you spent when you were out of town. It can end up being a significant deduction for last year. Last but not least, number 13, the qualified business income deduction, which is a 20% deduction in your business income for pass-through businesses, LLCs, S-Corp, sole proprietors. So if you have a partnership deal, an LLC, an S-Corp, something like that, there is a 20% tax deduction, 20% reduction in your income for that business. The single limit is $232,000. If you're married, it's double that, $464,000. And then if you're a doctor, lawyer, some sort of service business, there are phase outs that apply for high income earners there. But for example, if you have taxable income of $200,000 from a pass-through business, you can automatically deduct $40,000. So make sure that you and your CPA examine this one in full. That QBI deduction can be quite powerful. That's all we have on tax deductions for 2024. I want to emphasize all of those things we just talked about. You can also do them again and again, year after year. So it makes sense to go ahead and do them now, get that SEP-IRA set up, or whichever one you want to take advantage of, and then do it every single year and get those taxes down. But for a word from our sponsor, some people ask, what does Ticker Tape do? The answer is that we put investment opportunities together. We invest our own capital in those opportunities, and then we offer them to outside investors in the Ticker Tape community to participate alongside us. We do everything from multifamily to healthcare. I think one of the pictures there is our little hotel we invested in South Beach, Florida. Lots of pre-IPO deals, everything from SpaceX to Kraken to Palantir to SoFi. We actually have USA Rare Earth. That's turned from a pre-IPO deal to a stock pick now. That company has just gone public last week, and so we're looking for a liquidity event on that one here very soon. But we've had multiple exits, a lot of success investing in deals. I encourage you to reach out to Rita, find out what we have going on. You can also follow us on social media and on our website, tickertapeinvestments.com. Currently, we have 5 deals open. Is that right? Yep. Utility rescue, a merchant advance lending deal, a multifamily deal, which is in the process of being finalized as we speak. TTI Metaverse invests in early stage cryptocurrencies, blockchain software, NFTs, and metaverse real estate. Very high risk, high return type investments. And last but not least, we have a deal launching next week called TTI Vacation Holdings, where we're investing in a portfolio of freestanding homes that are going to be rented out on Airbnb, etc. So if you're interested in any of those deals, please reach out to Rita. You can get her at 832-459-7335 or rcarpel@utilityrescue.com. And she'll be happy to answer any questions for you. Of course, you can also respond to whatever invite got you to see this presentation, and one of us will see your question and reach back out to you. For that, I'm gonna let you guys go and look forward to seeing you on the next Ticker Tape call.